Gold is screaming what the headlines won't say. The United States is in a full-blown debt crisis.
I've been in the business a long time. I don't think anybody's seen anything like this.
Now, as for what's causing this record spending, a big chunk of it is interest on the public debt. The U.S. spending $308 billion in interest the first 3 months of this year.
I think the first thing is the debt issue.
Now, the media blames tariffs for inflation, uncertainty, and gold's recent rally, but those who have been paying attention know that central banks and those in power have been preparing long before tariffs ever entered the conversation for something much bigger. It's why central banks have been stockpiling gold at record levels. It's why nations have been quietly dumping their dollar reserves, because those at the top already know that this isn't about inflation or another recession. This is a global monetary reset, one that is already underway and currently accelerating, as proven by gold's real-time revaluation. So what signals confirm that this debt crisis has escalated to a breaking point? What does this mean next for gold? And most importantly, how can you use this knowledge to protect yourself before it's too late? Let's get into it. The United States isn't just in debt, it's drowning in it. $36 trillion in debt, a $2 trillion annual deficit, and $1 trillion just on the interest of the debt, and none of it's slowing down. Even the entities that usually look the other way, like Moody's, the last agency still giving the U.S. a near-perfect credit rating score, can no longer keep up the charade, warning of a downgrade. Not because they want to, but because the numbers are that bad. But yet Washington isn't slowing down. In fact, there are tax cuts being proposed right now that, if passed, would add $9 trillion to the deficit over the next decade. That's $9 trillion that the United States cannot afford given the interest on its debt. So what can they do about it? Well, there are two options: cut spending or raise more revenue. Now let's start with cut spending, which is a near impossible task, given that we would need to cut roughly $2 trillion this year just to break even. That's not even to pay off any debt, but just to break even and not add more debt onto the mountain we already have. And I'm sorry, but cutting government headcount, that's not going to do it. To put it into perspective, $2 trillion would be cutting all of Social Security and half of our defense budget, neither of which are going to happen. So that really leaves us with option number two: raise more revenue. But where does that revenue come from? See, right now, the primary source of revenue for the United States, primary as in almost all of the $5 trillion that we have, comes from taxes, income, Social Security, property, corporate, you name it. But raising taxes to pay off the debt is wildly unpopular. I mean, I don't want that. I don't want to pay more taxes. So what does that leave us with? And before someone jumps in and says that's what tariffs are for, I hate to be the one to say it, but purely from a revenue perspective, it is highly, highly unlikely that tariffs are going to make up the difference that we need. I mean, even the White House itself is projecting $600 billion as a realistic estimate, but most economists are saying it likely would be around $100 to $200 billion at best. And I mean, even if we went with the $600 billion, that still leaves $1.5 trillion that we somehow need to cover. But before I move on to where that leaves us today, I want to be clear: I'm not knocking efforts to cut and to raise. I applaud any sincere effort to do either or both of those, but the truth is, when the United States went off of the gold standard, the system broke. Stay with me on this, because this gets to the heart of what I'm saying. Alan Greenspan, former Federal Reserve Chairman, said, under a gold standard, the amount of credit that an economy can support is determined by the economy's tangible assets. Makes sense. But the abandonment of the gold standard made it possible for the welfare status to use the banking system as a means to unlimited expansion of credit. That realization by those in power a century ago is what has driven all of the choices and actions that have happened since, but it is being challenged. Unlimited expansion of credit. What if there is a limit. What if $1 trillion in interest on our debt actually is the beginning of the end? That there is a limit and it comes down to how much debt you can afford, because there is a breaking point when the debt is so large that they can no longer print their way out of it. Now, make no mistake, doesn't mean that there's not still tricks up their sleeve, that they won't try and manage the fallout and keep the machine running for their own gain using weaker dollar, Fed emergency intervention, market manipulation, changing rates, you name it. But ultimately, who is the one who pays? It's you. The signs are all there that a global monetary reset is accelerating. And as we reach the end of this currency life cycle, we know what comes next. Extreme money printing. They will go back to what they've always known, but it will be us who will feel the pain. Alan Greenspan goes on to say, deficit spending is simply a scheme for the hidden confiscation of wealth. Meaning money printing, it doesn't look like a tax, it doesn't feel like a tax, but you have no consent in it and it erodes your wealth just the same. It's just a sneakier way of doing it. But gold stands in the way of this insidious process. It stands as a protector of property rights. And if one grasps this, one has no difficulty in understanding the status antagonism toward the gold standard. It was true then, and it's true now. The only way to protect yourself against this insidious process isn't fiat currency. It's not the US dollar. It is gold. Real, tangible gold. A finite store of value. Gold is screaming at us that this debt crisis is escalating. The question is, are you listening? Let's take China as an example. If you were to compare China's gold holdings to US Treasury holdings over the last couple of years, you will see a stark difference, with gold moving up and treasuries moving down. But why is that? It's no longer just about trying to move away from dollar dominance or having an equal seat at the table. It's about serious concerns around the future of the US currency and the United States debt crisis, which are escalating in real time. The bottom line is this: I'm not going to sit here and say that everything that's going on today geopolitically isn't going to have an impact on gold, on the stock market, on the dollar's strength. Of course, potential trade wars and tariffs and all of these concerns are going to play a role. But the bigger picture here, the big picture that so many people are missing, is that we are in a currency crisis, that there is a global monetary reset underway. And ultimately, if it were me, I would want to make sure that I'm protected with something concrete, with something tangible, with something that cannot be devalued or revalued. I choose to protect my wealth in physical gold. And personally, it's what makes me sleep well at night. Now, that's my wish for everyone else out there. Everyone who's watching is to have that same peace of mind, not only for your own benefit, but because there is strength in numbers. The more people that we can help spread the word to and get the message out, the more strength and power we have. So if you're like-minded and you're concerned about any of this, I highly recommend that you download our free gold and silver guide. It is a terrific resource that everyone should have a copy of available to them offline so that you can reference it whenever you want. And in addition to that, I always say education is a key first step, but it is action that will truly protect you against what's coming next. So if you are concerned, or you want a second opinion, or you're just getting started and have some questions that you want to talk through with someone, you can always call us at the number below. You can talk to one of our expert analysts at a time that works best for you by clicking the link below, or scan our QR code. Again, scan our QR code or click the link, get a copy of your free gold and silver guide today, and talk to one of our analysts about any questions and concerns you have so that you can learn how we can help you. And as always, I so appreciate you being here. I'm Taylor Kenney with ITM Trading, your trusted source for all things gold, silver, and lifelong wealth protection. Until next time.